Question 1b. We were given this info about the business for the past 2 years about its profitability. So we had 2021 and 2022. And part B said, can you explain how the firm's gross profit margin could have increased during 2022 despite net profit margin decreasing? So if we look at the figures there, gross profit margin went from 41% to 56%, which is quite an improvement. Yet the final net profit margin went down from 11% to 6%. So for 2 marks, we need to explain that. And to do that, we probably want to do a vertical analysis. If you can wrap your head around it logically, otherwise that's okay. But you just want to do a brief little vertical analysis, which says we can express the income statement or the numbers as a percentage of the total revenues. And when we're doing this, we don't need to consider all the other little sections like other revenues or inventory loss and gain and so on. We're just talking about the big sort of main sections, which are revenues less cost of goods sold equals gross profit less other expenses equals net profit. So in this case, we know the revenue is 390%. Well, that's 100% of itself. What else do we know? We know the gross profit was 41%. 41% of what? Well, 41% of 390,000. So that's 159,900. Therefore, if we work backwards, we must know the cost of goods sold was 59% because revenues, 100, less cost of goods sold, 59, equals gross profit 41. And 59% of this number is 230,100. And finally, we know that net profit margin is 11%. And we actually had to calculate in the previous question that particular number there. And we can then work backwards and go, well, that must mean if gross profit was 41% of total sales or net sales, net profit was 11%, the other expenses must have been 30%, which was 117,000. Now, we can do the same thing for 2022. Take our base figure here of 490, get our gross profit was 56%, which works out at that number there. Cost of goods sold must have been 44%. Our final net profit margin was 6%, and that must have meant other expenses was 50%. So we've got all those numbers there, and now that we've done that, we're in a position to answer this question. So how could, if we just look at the one on the left is 2021, how could gross profit go from 41%, or 159,900, to 56%, 274,400, yet the net profit went down from 42,900 to 29,400, which represented for a net profit margin of 11% to 6%. So basically, we just want to go through all the possibilities. So working from the top, we could see one way that this could have happened is the business increased revenues by increasing the markup on sales. And we can see that. It doesn't look like maybe they sold more stuff. We can actually see cost of goods sold as a number went down from 230 to 215. So it looks like maybe they increased the markup on each sale. And that increased sales or revenues from 390 to 490. So that's one thing we could talk about. We could also say the business lowered cost of goods sold. Now look, as a total number, it only went from 230 to 215, but as a percentage of net sales, it went from 59% to 44%. And I guess it does say explain this question, so we should explain, well, one way that could happen is maybe they use cheaper suppliers, or so that would lower cost of sales, or a different delivery business, which lowered cartage inwards, for example. And lastly, the other way this can happen is perhaps other expenses increased. And that's what's happened here dramatically. We can see other expenses went up from 117,000 to 245. But as a percentage of net sales, they went from 30% to 50%. So basically, if we had to summarize this, what happened? Gross profit went up. The business did so much good work. It increased its revenues by increasing the markup on sales. It lowered its cost of goods sold. But that was all outdone because the other expenses increased so much. So we need to figure out a way to word this. So for 2 marks, how could we say? Now, we don't need to talk about every point. If we just go back a step. So I think what explains it is this. The other expenses went up so much and outdid all the good from up here. So I'm just going to talk about this lowered cost of goods sold bit. I'm not going to talk about the increased revenues. You could use that if you want, particularly if it was for more marks. You'd want to talk about that. But I'm just going to say, how could the gross profit margin go up? Well, it went up because the cost of goods sold decreased, and this may have occurred as the business changed to cheaper suppliers, so that's explaining it. However, that was offset because this should, on its own, increase the net profit margin, but the net profit margin actually decreased because other expenses increased proportionally more than the decrease in cost of goods sold. What are we saying here? We're saying how can the gross profit go up? Cost of goods sold went down. But how can net profit go down as well? Well, other expenses went up way more than the decrease in cost of goods sold. And note, your response of increased markup on sales is totally acceptable because there was evidence of that, because the total sales increased from 390,000 to 490,000. I just didn't choose to use that in my response.